As stated, parallel channels can help traders identify potential entries and exit points, as well as areas where price reveals or breaks out are more likely to occur. Breakouts occur when the price moves beyond one of the trend lines, indicating a potential shift in the trend direction. Traders often use technical indicators or patterns in conjunction with parallel channels to confirm their trading decisions. So here we have an ascending channel, and we're using optimism at the moment. Now, if you will use alleyway theory here, you will probably think that we are close to wave 5 or so. Now, but we have a clear pattern. A few things in context. Previous all-time high with optimism. So we have a neckline and then previous highs. So if you use these just in context, you'll see that that line doesn't make any sense. However, that neckline does, because that's previous resistance and then acts like previous support. So that's our initial point, first point that we will look at. So we use that as our reference pivot point 1. And then we have another reference point, pivot point 2. And then we have our reference pivot point 3. And what we have is, obviously, visually, we have this supporting grind line. And we have the all-time previous high. And if you were to use other strategies, you'll know what's taking place, which is liquidity hunting. So liquidity was taken out with this wick, swing failure pattern, and price came down. Now, this looks like a rising wedge on some sort, but also it's smart to apply the channel. So we can pick out a channel manually and just put it there and go, okay, does that make sense? Sure it does. So that's a parallel channel, but we probably are better off using a rising channel. And so what we do is just grab this parallel channel, click on that and click on the previous high, and that looks like a ascending channel. What we probably want to see is a bit of confluence to the wick, and if we were to push this back down a bit, you see the midsection making sense. Here it looks like the golden ratio based on this channel. So if we apply our tool set, let's have a closer look. So this focuses on ascending channels. Let's get our pitchfork, and our pitchfork picks our initial point, then our second point, and then our third point. And I got actually the wrong one. So let's just change that. There we go. It's not actually one I wanted, but let's just get rid of the background color. Okay. So I've already done this, and I'll just add it, enable it, and this is pretty much what it is. So we can get rid of our manual and use our pitchfork. And here we have a good example where things sort of line up. Obviously, if we could massage it a bit, but I'm pretty happy with this midsection and this pitchfork using this method. Now, with the pitchfork, we have some pip levels of importance. So we have the golden ratio, and I like to make that in gold or orange and thicken line. So let's put on the 32 or 382. So that's our 382. Let's just make that another gold but thinner, and the 0.5. So you can see how that works out to be. Now, along with the rising ascending channel, we can apply Fibonacci, but understand that this is a key level because it's touched 3 times. So if we break this level, it is going to drop most likely. And what we did state here was the previous high, another trading strategy that comes into it. That the stop losses are there, or liquidity, and let's just label it. And this wick sort of takes it out. So that is a swing failure pattern on the 618 channel, and you can see how the 618 also acts as support here as well. So this is a real nice level to understand that in future we could probably get a rejection and drop, and we have our levels. So finding entry now is going to be difficult, but we understand what's taking place. Now we can look at from a channel perspective. This one is a double top. The fact that I got a rejection there is it's very unlikely that we get a touch to the top of this channel, but if we do, it's likely to be a shorting position. So let's apply Fibonacci and see how we explain certain prices. From this point to the previous high there, you can see how actually the 786 came into place there. Right there. So the 786 came into place as a rejection spot. Not quite up there, but you can see the majority after that rejection, the 618 became the main reason for resistance and it came down. And here we had the double top with the liquidity hunt and then push down. So let's play this forward and see what else we can get from it. Oh, there you go. So we did get a rejection and then we come down for another liquidity hunt, which is the stop losses under there. So that took it out. Another failed auction type of thing. Actually might be a swing failure pattern there, but you can see how the previous high or the previous resistance and support became a means for going long. So as soon as we break above it, it was a means of going long. Now you can see how this channel plays out, and that's where we are today. So that grind line, can we apply another channel there? Maybe. Let's just have a look. Yes, it is. It is a channel. So if we identify this early, we could have traded this channel. Not the easiest one to trade, but definitely there. And if we were to just apply it to the top, and that makes sense, 0.5 fib and 382 as a main resistance. So we are likely to drop, guys, further a bit more. So if we lose this grind line, we are likely to drop further down. Okay, I've taken the liberty to add another channel from the top to the down. And what we've done is we used the all-time high, this next level, swing low, and then the swing high. And we applied our most best fit, and you can see how the channel actually makes sense. Again, the channel structure. So once we saw this, if we identified this early and did a good job of it, we could have said that, yep, that could have been a good entry position. And how we look at this position, we'll basically look at from a Fibonacci level, I suppose. So let's see if it's got some confluence with a fib extension, give or take. Actually, let's just bring this down a bit to the wick, and it's really the fib extension of 1. And then you can see how the 1.618 was also almost aligned with this 200 degrees or 200% deviation. That is usually, once we break that, that usually means change in trend. So we have this macro trend line. At the moment, this channel, descending channel, hasn't broken, and we have this what seems to be a bear flag. So we've got price coming down, bear flag type of thing, and then it's likely to drop if we break this supporting trend line. So you can see how the golden ratio level, the gold, is also acted as resistance along the way. The middle of the channel looks really good, so you can say there's points where there is resistance and support, and this is the key one. If we were to apply another channel to this one, we will probably get another perspective very similar to the previous, where that looks like it's going to drop. So I'll use a different point. I'll use that point versus that, and you can see again it doesn't capture this that well, but it still does the job. Golden ratio. So let's look at both of them at the same time. the difference. See the difference in the angle? You've got to be very careful on how you apply this. And let's see, where is it gone? If we take that off and add that on, I like this one more because we take it very high and the next bottom and then a swing. One would say you should take that level, and let's try that, see if that makes any difference. Again, swing high, swing low, and take this one. And you can see how that turns out to be. Doesn't quite capture that. However, let's see if we add the other percentage. Yes, it does. There you go. So that works as well. Those 1, 2, 3, and you can see how that captured it. Now, if this is a true channel and this is breaking out of the channel, that is a trend change if this is true. But how do we know it is going to be true? The fact that this could continue. But like I said, if this was to break below and then come down, then this channel is not the appropriate one. This one would, no, sorry, not that one. This one will be more likely to be the true one. And then we can keep using this, if that makes sense. Because if it breaks down, that means that that level, actually, let's see the other one. This one. I think it's a hard one, isn't it? These 2 points makes sense more that this is bearish because we drop down here as well. And that's basically saying it's bearish under 200 degrees. It's a hard one to figure out, but the only method of trading this is looking at what we got in confluence, the golden ratio in the channel. And so if price was to come up, we are looking to short that potentially. Likely to find resistance, and we look for a swing failure pattern or failed auction in that region. At the moment, we don't have anything there to trade, but we've got lower highs. So this could be a lower high before it breaks down. No trade set up right now. So we'll come back to this with screenshots and see how it turns out to be. Talk to you soon. Cheers.